and we will see you again shortly. There we are, Steve Buckley, thank you very much. And there we are, moving swiftly on. We are just on 12 o'clock now, so we are going to go straight to Carol Harmer, who I can see is in the room already. Carol, you should be able to hear me now. I've taken your microphone off, so...
I can hear you, Simon, I can.
Hello, how are you? It's nice to hear your voice.
Yes, I'm fine. I moved yesterday, so everything's a bit topsy-turvy, but I got the office up and running, so that was good.
Good. Oh, fantastic. And have you been good? I know that you've been taking some mentorees, some students for the Charmer Trading Academy recently.
Yes,
Have you been?
Yes, I have, and I've got some coming on Monday.
Oh, fantastic! And a fresh batch.
Yes.
That's great. Well, let's go over to your screens. I know we want to make sure that we're looking at the right screen, so I'm going to press the button to make you the presenter. And now, if you confirm that, we will then be able to make sure that we are looking at your charts. Just while we're doing that, for anybody that hasn't...
You see it, Simon?
There we are. Yes, we're looking at the full screen. What are we looking at?
So,
I can't quite make out. It's the FTSE 100, isn't it? Yeah.
100. Yeah.
That's the right one. That's the right one. Great. Well, for anybody that's not had the privilege of listening to one of Carol's talks, Carol has a long, illustrious career in investment banking and really one of the pioneers of technical analysis in the UK cities banks. You were you trained up a lot of the technical analysts that we know of. In fact, you were training them as far back as the 1980s in was it Midland Bank and Nomura?
Yes, Midland, Nomura, Credit Suisse. Yes.
You really do. You've seen it all from the inside, from the trading floors of the city, and since then you're now obviously a retail private trader yourself, and you conduct a daily sort of trading room with your members, and also some training, these residential courses that you're talking about.
Yes.
So always great. I can always see the attendance spikes up when we have you on the RTC show, so we're always grateful for that. And again, to people at home, just to confirm they can hear Carol's voice using the chat box, if you could just let us know that you're able to hear Carol and also see the live chart of the FTSE at the moment. So this, as we normally do with Carol, we invite questions. We invite you to let us know what you would like Carol to analyse and to explain the various levels. I see you've got the sort of the fib levels there overlaying the FTSE and one or two trend lines. So perhaps we could start just by making an analysis of this chart and letting us know what you...
Okay, well, what happened with the FTSE, you can see here where you made that head and shoulder pattern. Everyone can see that, hopefully. Sure.
Yes.
And I drew the neckline in there because I wanted to be sure. You can draw necklines anywhere. You can draw them upwards or downwards. But for me, that was the one I wanted. And obviously, when we broke it, down we came. Now, our target was 70.65 on the break. If you did the measured target, didn't quite get there. But this little bit was interesting. You know, you can see these, they just go down and down and down and down and down. And all of a sudden, it's like, doesn't know quite what to do. Yes, it was the French election. And yes, I caught the last bit of the previous speaker's talk, the last 10 minutes. And quite frankly, the French don't give a damn about the French elections. I think the important thing to notice was that Le Pen did say if she got in, she was going to bust Europe wide open. So that was the focus. It wasn't so much on the French election. It was, if she did get in, there would be no more EU. That was it. And I think that was what the market was waiting for, because I've got obviously friends that live in France. I lived in France myself, so I keep abreast of these things. So No, the French don't care, but it should affect everybody else because she will pull out, you know. Anyway, she got through the second thing, and Monday morning, here we are. Now, the important thing to note about this little pattern here is it is a bearish pattern. So when it couldn't break up yesterday, and please believe me, it tried, because I sat there and we watched it and we was all short at 72.88 going, is it, isn't it, isn't it? And you know, sometimes boredom will set in. This is why, you know, for some traders, what Steve said is absolutely right. If you want to go in there and you want to take your 20 pips and your 20 pips and your 20 pips and your 20 pips, yes, it can add up to as much as me sitting there going, that's not going down anymore. Tell you what, we're going to buy it here. For me, it's less stressful. That's just a personal opinion. And obviously in the banks and on the floor, you had scalpers, you had spot dealers. It wasn't my job. My job was to go in and pick levels where you could actually physically go and trade. And, you know, I personally don't think you can do that on a 5-minute chart, 10-minute chart, 15-minute chart. But there are people out there, and that is the way they want to trade. I'm learning that with the people that I have over, is that, yeah, they love the fact that you can see these patterns and you can see where the market's going. Or I say guess, Simon, but I'm not guessing. I'm saying you can see that that pattern there is a bearish pattern, okay? But what some of them want to do is they feel like they have to be in trading. And if they're not got a position, there's something wrong with them, you know, and that sometimes really isn't the case. Sometimes it's better sit on your hands, do nothing. Yeah? Okay. So what I wanted to do is I wanted to know, with Fibonacci, it all depends on where you put your level, where you start from, where you finish. You're going to get people tell you you take it from the top to the bottom. I don't. I go, where did the move start? Started there. That's the bit I'm interested in. I'm not interested in this bit because that bit, it's all a mess. I'm interested in where it goes from here. And as you can see, look, when we went up yesterday, we had that level in at 72.88, the fib level. The stock was above 73.15. Okay, didn't do it, but still kept you short. But look, the important thing is when we've rallied back up and we've come down today, look where we've held. We've held that neckline break. Now, you can see quite clearly I put the line on, right? That was the neckline break, and that's where we bounced from. So obviously we're now clear of FTSE, looking to do something else. But the way that you can take a longer term, when I say longer term, it's not, you know, you're not longer terming for weeks and weeks and ever and ever and ever. And I certainly don't take a position and go and play golf. I might take a position and run to the shops, but I'm always around so that I can keep my eyes on it, because markets change. And what has been said previously is absolutely true. 35 years I've been in this market and I've never known anything like it. Really, I haven't. You know, it's absolutely right. A president in my lifetime has never come out, never had a Twitter account, and has never talked so much unbelievable stuff in all my working life. So maybe there is something to do taking a 1 to 2 day view rather than running it for a week or whatever, because, you know, the way the markets are at the moment, they are probably the most difficult markets we've ever seen, purely because they are run. You've got to use, they are run on what he says when we're asleep, you know.
So on the one hand, it's the volatility can be good, but on the other hand, it's making it more difficult to take longer positions, because
it's not to making it difficult to take longer positions. It's making it difficult because how I would work. I mean, the guys on my group will tell you I would run positions over a weekend and not think about it. I prefer not to, because I like to take Friday afternoons off. Because I work Sunday, I think I'm going to take Friday afternoon off. That's just a personal choice. But, you know, the way the markets are going and the way it closed, it's like, do you really want to run that over the French election? No. And then you couldn't get in unless you were trading the Asian session, which was looking quite horrific at one stage. Unless you were trading into Asia on Sunday, you know, you couldn't get the majority of that move. So you clock it on the way down. You know, if it doesn't break through 73.15, which you know was a level on the way up, it isn't going up again. So it's very difficult when you've got a very limited amount of money to actually trade these markets. You've got to use wider stops and you've got to have deeper pockets, unfortunately. That's the way of the world, and that's bringing it home, I think, to me now, is that working for a bank, even working for myself for the last 20 years, I've never had to worry so much about positions over the weekends because it wasn't going to kill you. You know, we've gone past the central bank intervention that could kill you on a Sunday. You know, it was, markets were fine. They were generally, they'd gone along like they always had. Bang, November, and someone should gag him or take his Twitter account away.
What about stops? What about
Well,
stops?
the stops are quite good because you see the trouble is, unfortunately these days you are run so much. I mean, the old days, I don't want to sound like a dinosaur, but the olden days of you've got the bank's support, if you like, you don't have that now because the majority of trading's done computer generated. You know, you've got these not prop traders that go, yeah, that's not going down, that's definitely not going down, and prepared to buy it, and the other way around. You don't have these. You have people that are running automated systems, so their choice is taken out of it. So this is why you've got these spikes, because it's just these computerized systems going off. You can see that there's no depth or volume in there, but we don't have the support, if you like, that we had 5 years ago, 7 years ago, where you had this, you knew where the banks were, you knew where the hedge funds, I mean, you've still got the hedge funds, but even a lot of them have changed into computer-generated trading. And I'm too old to learn that now, I'm afraid. I have to just do it my way.
The algorithmic traders, yes, how to compete with them. So,
well, you can compete with them, because what you have to do is you have to then readjust your way of thinking. For example, we were short yesterday 72.88 in the FTSE. Now, say you wanted to go short at, you were short there, where would you usually put your stop? I mean, that's down to your individual people, but where would you usually put your stop? You're not going to put it by 7,300, but say you don't have that much money and you're thinking, right, well, I'll do it. It should hold below 95, and you put it there. You're going to be taken out, because the way it works these days is there's sniff hunting stops. So you've got to leave, even on FTSE, more than a 20 pip stop loss, which, you know, as it happened, has worked out okay. You're not getting the risk reward you used to. I always used the 3 to 1, then I went to 2 to 1. At the minute, it's looking 1 to 1, you know, but you have to know where to take profits. Like we took them down here for this very reason. You know, there's no other reason to stop there. I can't see another level really on a 4-hourly chart why that would have stayed there. You've got a little bit over here, but nothing drastically, not to the tick. You've just got to reassess how you trade and how much money and willingness you're going to put into this. But this was just one of, you know, there's plenty of things we want to discuss. Now look, FTSE's on its way back up there. You see what I mean? You can't afford these days to sit on your laurels. You've got to have a realistic target. And when it hits that realistic target, you're out, you're done. Our realistic target today was 40. Went to 38, done, finished, end of. You know, which is not bad. You know, 48 points in FTSE, not taking into consideration this, which happened when we wasn't around. But you've just got to know what you're looking for, and so you can eyeball the chart and you can get into these moves. And if you look at the bigger picture here, you could see that the FTSE was going to go down. I mean, even if you looked at a daily chart, there was nothing bullish at all about the FTSE at this particular moment in its life. You know, it was always making that top. It really was. And the idea is that you go with it. And you can see, you know, this is a bearish flag. It's not a bullish one. It's bearish. You've got higher lows, higher highs, bearish. So unless it breaks through here, okay, we're going to go lower again because there is no reason not to. Is anybody interested in the DAX?
Funny you should say that. Mr. Smith has already let us know that he would like us to look at the DAX. So,
Well, the DAX has been a wondrous thing. Now, I don't trade the DAX. It's a personal, nothing horrible about the DAX. It's not a nasty market. I just don't personally like it. If I put that on a monthly, and you can put it on a monthly. Now you can see quite categorically that the DAX is in an uptrend. Okay, you can see it, it's there, it's for everyone to see. Now the problem comes with it being in an uptrend is how long before overhead pressure comes to little fruition with it. If you look at this double top, okay, first of all, can everybody see that? Can you see that here?
yes, just, yeah.
Okay, so that took 2 years to, you can see there it went 2015, and we've just done it. Now, it's up a tad today. If this doesn't break, what happens is the rule of thumb normally is doubles hold, triples don't. Okay, we had this bullish thing here, and when we broke there, we've kept on going. Now this really should have held it, and it didn't. If I take that back to the weekly chart, it held it for like not that long. Can you see what I mean? So it held first, come down, and then we've had this week's gap open. Now the problem with charts like this is on these major double tops, they've got to really be maintained on a weekly closing basis. Now, if that DAX doesn't hold 400 on Fridays by tomorrow on its close, okay, it's going to send a massive signal to the market is that it's going lower. Because these tops, you know, they take 2 years to form. They don't form for nothing. Now, because of Monday, it's become, everybody wants the DAX, and you know, because it's a great thing now, and Germany's going to not be running Europe by itself, blah 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 blah. But I don't think that it's got that much further to go. I think we're going to see a pullback, but I can see it going to 645 first. Now, once we've broken this, and if we can stay above here and go to 645, come back, but we've got to hold above here again. And quite honestly, sky's the limit. There is nothing to suggest that we would go lower at all, because the market's looking bid. I mean, it is looking bid. Just putting a little weekly channel on there. So it can quite easily go up to that 645 area. Can you see that?
Yes, we can. Yeah.
Okay. I mean, I have a delay on my system, unfortunately. When I'm sharing my screen, I have a delay, so I can't. Now, normally markets don't like gaps. They just don't like them. So what you could say, and what I'm hoping, is that they all come back down. It will realise it's got a little bit away from itself, come back down, fill that gap, and then we should be off and running to the races. Now, the thing with double tops that turn into a double hold, a triple won't. Now, the problem is then is where will it go? You know, you have to keep drawing in pivot lines and Fibonacci extensions and God knows what. But your rule of thumb is it's going to go to the top of this channel line, which is intersecting with that trend line here, which takes that at 645 to 655. any more questions on the DAX?
Yeah, any more questions on the DAX, folks, or anything else that you would like Carol to go and have a look at? What have you been trading, Carol? Where do you think the most?
Well, I'm doing it. I like the stock markets at the moment. I've got some orders in currencies. Let me just get the euro. Sterling's the one for me. I said this last month. Remember? I'll pull that one up. Sterling is definitely the one for me.
Look at that, yeah.
You know, bullish flag, up again, measure target 130. If you look at it on a weekly, I mean, I'm sure the last time I was on, I mentioned I mentioned this, and I did tweet it out like, come on, you sterling guys, you know, go for it. And it's working. This base pattern here, okay? I mean, you've got a double bottom, and then you've got a head and shoulder double bottom. Both have a measure target of 135. Now, if you look at this intersecting lines here coming in, we're looking at 131.30, okay? I can't get that direct on there. 131.30. Obviously, you've got round figuritis at 130. It's a big level. You know that. We all know that. But the measure target on that is 135. Now, you might scream, well, that's way, way too high. Well, not really. I remember up here when 135 was way, way, way too low. And it all depends. I mean, markets drive themselves. There's no set rules or whatever. You can't fight market forces. You just can't. People have tried, notably Bank of England in the 1991 ERM crisis. They tried to defend sterling with all their might. They lost a fortune, you know. So, but for me, I think the most significant chart pattern that I've been able to find is sterling. And it seems to me everybody wants it. They didn't. You couldn't find anybody wanting it down here at all, you know. I mean, I sent a message to the Twitter mob going, come on, you know, buy it. It's not as bad as what people think. Look at the way the chart is unfolding. Now, you can do this. You know, you can trade this short term. But as long as you know which direction you're going in, you know whether you're buying dips or selling rallies. You know, you can't look at a 10-minute chart and have the direction of the market. It's impossible. But as long as you understand where it's going overall, that will help you so much. And then you can take your 20 pips and 20 pips and 20 pips out of it if that's the way you want to trade. You know, I'm not suggesting for 1 minute that anybody alters their style of trading. It's completely individual. I've just never been able to trade like a spot trader, and they've never been able to trade like me. So we agreed to differ. But
what about the moving over back to the stock markets, if we may? A couple of questions about the Dow.
See, I like all these stock markets. I think they've been really good. So let's have a look. See my other system. So I've got my other system, but it's in black, so it's not very good for this. All right, there you've got the Dow prior high. All right, and bear in mind the DAX is broken, so you've got this 169 previous high in the Dow. Okay, and at the moment, well, and the other thing is, I would suggest, and I strongly suggest, can't stress enough, if you're trading these markets, okay, try not to trade them outside of the cash opening hours, because on these platforms they can go anywhere, okay, because the underlying isn't open. So you need to have the underlying open, and we've seen it time and time again. So the Dow looks strong, and I think we're going to go up to here, which is another 100 points higher. And then I think it's going to start to come under pressure. Okay, But if you look at the Dow on the weekly, well, we are at the weekly, you look at it, if it fails here initially and comes back but doesn't break below, your little thing's in my way and I can't move it, and it doesn't break below this level here, okay, then, which is 723, then it's going up to the races again. We're going to go up to there first, okay, and no reason why we can't do my Fibonacci projected target 2200 125, if you can remember that, because I can't remember that. 2200 125, because there's nothing, there's no topping pattern evident. It's technical indicators look bullish for it, so you're going to get people sell that prior high, it's obvious. So don't go and buy it before there, okay? Please don't do it. Let it make its double top. Let it come back a little bit, and you get it on the third time. At the third time it breaks, that's the one it's going to fly. Even if it breaks here first, it stops coming out. Be aware that it stops coming out and not the real trading market, if you like. It's people that have preempted it's going to stop before that level, and they want to get out if it goes through it. So you have to get rid of the noise, sit back, ignore what you see, and then wait for it, see if it comes down to here again, and then buy it, because all these look like it's going higher. Now I can look at it on a daily for us. The hourly chart's a bit of a mess, to be honest, on the Dow, because it's not open that many hours. We get a bit gappy and not a lot going on. So I don't tend to look at the hourly chart on the Dow. I look at the weekly, the 4 hourly and the daily. But again, you can see it clearer here. There's your thing. Let it go up to here, let it come down, but it's got to stay above this level here. Otherwise we won't be able to break higher. Little bit overdone on the daily, which would really coincide with the fact that it tops here, comes down a tad, and then it can go up. Now what you don't want it to do is go below this point here, okay? So if we go below 640, well, let's give it 630, we don't want to be holding it at all, because the chances are then it's coming back down to here. But please don't rush out and buy it any level between here and here, because I think you'll get caught, and that's not what we're aiming to do for you.
Thanks, Carol. Now, going across the other side of the world, the ASX 200 index. Peter's asking if you think it might be ready to break the 6,000 level.
The ESX?
The ASX.
I don't have that on my system. I don't look at it. I don't. I have enough keeping up with the ones into the New York. I glance at the Nikkei sometimes, but no, not the.
Okay. Okay, we can't. Sorry, Peter, we can't go there. Wayne's asking what platform you're using here. We can't quite make out the.
This isn't a platform. I use Pro Real Time that you pay for. It's not through a platform that you pay for, and I use eSignal.
There we go. And Richard says a lot of the levels in the indices are QE money. How low will the Dow 30 drop when taps in Europe and the Far East are shut? Okay, so quantitative easing, Richard is asking about.
Yeah, but we've had QE now for 8 years. And, you know, if you look at what the market has done in 8 years, it's gone up. Okay? So we've lived with QE since 2009, 2010. Please believe me, we've lived with it. So will it dry out? Will it dry out? I don't know. I've got no idea. Every time you think it might, they do it again. So I don't think you can trade like that, looking at the QE, whether it will or will not fade in and out, because if you was looking at that, you would have been stuffed years ago, I think. I suppose at some stage the money will run out, but they've kept it going long enough now. In fact, QE, to be honest, was one of the things in the last 9 years that's bored me rigid, because you've just heard nothing but it, and it's still going on. So I would assume that they're quite happy to continue doing it. It's an easy way for them, isn't it?
It is indeed. Printing money sounds like an easy solution.
It is. I mean, that's it. I mean, why would you stop? They haven't thought about. I mean, nobody's mentioned the word to me, runaway inflation, I have to say. So they just keep printing money. That's it. So until they take the decision to stop doing that, unfortunately, we have to live with it. I mean, and it's bad enough living with that as living with Trump, bless him. But the thing with the Dow, look, that you probably don't see on your spread betting platforms because they trade all through the night. Mine don't. I've got this set up for cash only. Okay, it does. I don't want to know. I do. I look at it every morning and think, yeah, okay. But I don't want to have. I want a genuine cash chart. That's what I want. I want to see where there are gaps. Where did the market close? What did it do? I don't want this 24 hours. It's bad enough on spot, so I used to have to work it all out. But with this, now what you could be seeing is this exhaustion gap. You know, markets don't keep gapping up. Now, yesterday I sat and watched the Dow, and I thought, do you know what? It doesn't look. It felt what we call heavy. Do you know that? Everybody knows that. It felt tired, heavy. It was like it needs to come down, and it needs to try and fill gaps, because, as I say, markets don't like 3-day gaps on a spin, and that's what it's had. 1, 2. Do you know what I mean? It's gapped up and it's gapped up. Yesterday it just couldn't do anything. It was like that boring. But I still wonder about this level here, whether it will try, whether it's too near not to at least try for it. But when you're trading this, I would suggest very strongly that you leave quite a wide stop, because the world's going to be trading it. And you don't want to get caught up in the computer generated, I'm going to have your money stop business. We're not in the business for that. We're trying to never outwit them, Simon, but give them a run for their money.
We are indeed. Believe it or not, we're almost out of time. I wonder, Marvino is asking, finally, can we have a look at the euro pound, please?
We certainly can. Now this has been a really interesting little chart, okay? And come here, you little love. Now I can't see any reason at all why you'd want to buy euro sterling. You can see categorically we are in a range. Now, whether or not, I mean, I have to laugh. I get reports from banks, and they're going on about. They are funny, some of them. They're going on about we could go back to these highs, right? And the guy said the same for the last, I don't know how many months. But the chart, look, we are at the middle at the moment. If you use the 85.5 as a guideline, that if it's above it, it will go to 87.5. If it's below it, it will go to 83.5. If you use that sort of thing, guideline, just for shorter term trading, you'll be fine. Looking at that longer term, I think it's an accident waiting to happen. I believe that it is going to break this 83.5, and it is going to come all the way back to here. I'm not saying that just because I get paid in sterling and live in Spain. I'm saying that because I genuinely believe it. I don't see any reason to buy the euro against sterling. Now, not after it making this sort of pattern. Look, we'll have to leave this out because that never happened. Okay, that was that flash crash in October. But this bit here is not looking particularly buoyant, I don't think. And you know, it's done it. It's come down quite a bit in the last couple of weeks. So you can see where it double topped up here and just kept going down to this line here, which you can connect 2 on, and then it gives you the 3rd. So, you know, you've got to be aware of these double tops and triple tops in markets, and so that you could, you know, when you see a market and you can see that the highs are getting lower, it sends you a signal. They talk to you. They're like, at whatever point this isn't going any higher, and then you trade accordingly.
Fantastic.
Well,
Carol, good. Thanks, Carol, says G. Smith. Good to hear your views again. Thank you. Okay, I think we'll have to wind it up there. We've run just a few minutes over.
Okay, Simon.
That's great. We really enjoyed that. Thank you very much just for your views. We'll come back to you again in the future. In the meantime, hope the move goes well. And
I've just got to unpack boxes now. I'm smothered in them. The only piece of the only of tranquility I have is the office.
Fantastic. Well, listen, good luck with all that. Thanks so very much for joining us. I'm going to take the presenter role back from you now. Many thanks.
Okay. Bye, guys.